I'm just saying, I usually record. I was late.
Oh, and I forgot to record. I totally forgot. But the video is there in the private mentorship. Whoever is in the private mentorship, the video is there of news. There was a question. There was a question. Someone was about to ask a question. There was a question.
No, he said to go over it again so you can understand. He
Oh,
doesn't
okay.
get it. Yeah.
Okay, no problem. Plus, we are recording, right? Right. Yeah, let's start the session. No problem. Speaking, uh, yeah, with speaking
The
of the
Rory,
movement of
the
Friday,
Rory,
right? Yes, sir.
the Rory, can I
Yes,
ask a
sir.
question?
Please.
Yes. On your videos, current strength meter.
Yes, sir.
There's a video that you've posted.
Uh-huh.
That video says
Uh-huh.
uh we are going to the up or we are going to the down. Ne?
Yes,
Could
sir.
you please illustrate after seeing whatever the current strength meter says, because you said on that video, could you please refine that video? Kahle kahle.
I
Kopa o
don't.
refine.
The video was about the news and currency strength meter.
Yes,
Okay,
it was about
I
the
will talk
news.
about that one. No problem. It will
Yeah.
be covered here.
Kopa o refine that video, because
Maybe.
there's where you say the market, you go to the upside or you go to the downside. So I didn't understand
Okay, no problem.
there.
I will gonna add currency strength meter here. So can you please guys mute? Can you please guys mute so that I can explain here and we'll talk at the end and we'll fix all the problems at the end. Please, guys. Please. Here we're speaking of non-farm payrolls and unemployment rate, right? These two events are different, right? Right. In non-farm payroll, right? Before you trade non-farm payroll, you come to your what? To your forecast, right? You compare your forecast with your what? With your previous, right? Put that in your head. You compare your forecast with your previous. Simple. How? You want your forecast to be bigger than previous or less than previous, right? When it's bigger than previous, it indicates that by 3:30, gold will sell because we'll be having a strong dollar by then. When it's less than previous, it indicates that by 3:30, because it is less than previous, gold will buy because we'll be having a weak dollar. I hope we understand that part. And coming to unemployment rate, right? Unemployment rate must not be high, as you understand it, this term unemployment rate. It must not be higher than our previous. When it's higher than our previous, it affects the market how? Negatively. It must not be high, right? When it's lower than the previous, it affects the market how? Positive when it's lower, right? So because it's high here, right? What does this tells us? It tells us gold will do what? It's gonna go to the upside, right? Because we'll be having what? A weak dollar. You understand each other? So this event will affect the market, both of them. You must understand something. As long as it says 3:30, both these two events will affect the market. When they affect the market, right? It's very wise that you know points of liquidity, any point of interest, all the fair value gaps, right? Before they hit. Like for example, let me not say before they hit. For example, right, we have an old FVG up there, right? Before they can take this movement, obviously the movement of non-farm payrolls must be long, right? Before they take the movement of non-farm payrolls, they're gonna do what? Respect unemployment rate, go up there so that they find what? Old fair value gap, or they collect the liquidity and they drop. That's why Friday we had a movement to the upside and a movement to the downside. This is how you trade it. Very simple. You compare the two. You compare forecast and previous, right? Your forecast must be bigger or less than previous. When it's bigger than previous on non-farm payrolls, you're expecting strong dollar. When it's less than previous on non-farm payrolls, you're expecting a weak dollar. When you actual, let's use actual on unemployment rate, right? Because why? Look at how they predicted this. So when you actual is bigger than previous, right? What's happening? We expect a buy on what? On gold. When it's less than here, this is unemployment rate. Don't forget. I know it's a bit confusing, but I'm recording this, right? Yeah, I know it's a bit confusing and I'm recording this. So I don't know if I'll be able to share this inside but no problem. I will share this inside the private, the session inside the private mentorship. So when, what were we talking about? We were here, né? This must not be bigger than our previous, right? And again, this is another way of seeing spike. This is another way, right? All right. We're gonna go to currency strength meter very soon. Right. I want us to come here before we go to currency strength meter, right? Yes, nice. Nice. Let's look at this movement here. What time is it written down there? I want you to see what I'm talking about. What time is it written down there? 3:30, right? Which is, yes, which is this candlestick is the candlestick of non-farm payroll, right? At 3:30, right? And unemployment rate, right? Let's look at this movement, right? What happened here? Look at this. By the time it hits 3:30, they sent this market to the upside. To do what to the upside? To collect what? Liquidity. Look at this relative highs here. Look at this. And mind you, I know, let me not say I know. Mind you, we have relative highs and equal highs. Right? What are relative highs? Relative highs are not equal. They are not equal. Equal highs are equal. Those highs are equal. For example, let's look at okay, they are not equal. But I hope you know what I'm talking about. I hope you understand these two terms. We got relative highs, they are relative, they are not equal. You see, this one is taller than this high here. You consider as what? You consider it as what? Relative highs. But if they were equal, we were gonna say equal highs, right? So we had this relative highs here, right? Look how they sent the market to take out this relative highs. What did the Rory say when you see the equal highs? Simple. So unemployment rate is the one that took us to take out this relative highs. After that, we went to the downside because of what? Non-farm payrolls, right? This is Nasdaq, but no problem. This is Nasdaq, no problem. You understand what I'm saying, right? Let's do it on call so that you see what I'm talking about. Go, 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 go. So this was very nice and quite very simple. My network, it must not start. Nice, nice, nice. Let's go to 3:30. Where is our 3:30? This is 3:30. This is the 3:30 candlestick. Look at this. Let's look at this. Look at this 3:30. Can you please mute, guys? Thank you very much. Look at this 3:30 candlestick. This one, right? All right. Look what happened. What it did. It went to the upside to collect what? Look at this. Collecting liquidity is very important. The points of liquidity very important. After collecting this high here, look what happened. The market shot to the downside. What took us to the upside? Why did we have the spike? In fact, let me put it like that. Why did we have the spike? You understand what I'm saying, right? I hope we understand each other. We had a spike because of why? Unemployment rate. And the market went to the downside because of why? Non-farm payroll. This week here is the week of non-farm payroll. I hope you understand it. I hope you understand what I'm trying to say here. So the reason again we have this week here. Oh, this is simple. This week here is a week of unemployment rate. This one, non-farm. Quite beautiful, ne? Very nice. Very nice. Back to our next 100. Our favorite one. Look at the structure on gold. Did you see the structure on gold? And look at the structure on next 100. Which one is beautiful? Which one is beautiful, guys? Because we had what?
Yes.
Next 100,
Yes,
right?
100.
We had our power of three. We had what? Consolidation. We had the manipulation and distribution. Isn't this your power of three? Look at the manipulation candlestick. Look at your distribution. Isn't this the power of three? So you see how it is so important to just mark out your what relative highs and you observe what the market is doing after they've been taken out. Symbol, right? I hope we understood each other. And speaking of currency strength meter, nice. Let's go to currency strength meter. So I have network problem and I don't know what's up with the network problem. So speaking, what is currency strength meter, guys? I hope we understand each other. I hope you know what I'm talking about when I'm speaking of currency strength meter. Currency strength meter. Yo, I can't even say it because of the bar, this bar here on the screen that shows the what. I hope you understand what I'm talking about. You guys are using Zoom. But anyway, how do we use currency strength meter again? Right? You use currency strength meter to do what? To check the spike again, right? And again to boost your confidence. You check the spike with currency strength meter, you boost your confidence with currency strength meter, right? I don't want to pump you with too much information so that I don't know, I don't want to confuse you guys, right? So on currency strength meter, we focus on USD, right? You're running out of time, no problem. So on currency strength meter, we focus on what? On USD, right? Focusing on USD, how do we focus on USD, right? Straight back to economic calendar. Okay, let me wait for it to disappear. Yeah, nice. Back to economic calendar, right? Nice. So on non-farm payroll, right? What are they saying? They're saying our forecast is 159. In fact, they're saying our forecast is bigger than our previous, right? When our forecast is bigger than our previous, what are we expecting on gold? What are we expecting, guys?
Sale.
We're
Gold
expecting
to
sell,
sell.
right? Right? When we're expecting sell, what are we expecting? What are we expecting here on the bars of USD here in currency strength meter?
Just be low.
Because of this shows the
Be
strength
more.
of the,
The
of
bar must
the
bar must be more than 5.
come again.
The bar must show more than 5.
Nice, beautiful, beautiful, beautiful. So this shows the strength of these currencies, right? So when we're expecting, when we see that, okay, fine, they're saying our forecast is bigger than our previous, so we're expecting this bars here to be more than 5 so that we can sell with confidence. But if these bars are less than 5, it shows that what USD does not have what strength, right? When it does not have strength, what happens? You see that's how we see the spike. How is it that we're gonna sell, but when you come to currency strength meter, USD does not have strength? 1 plus 1 must give you 2. When situation is like that, I observe, I watch, and I trade after the event. And we're gonna have a session tomorrow. How to trade after the event. We trade after the event. Because why? Because why? 1 plus 1 is not giving me 2. I come here, I see that, okay, fine, USD, the strength is less than 5, meaning USD does not have strength. And I come here in economic calendar, I see that no, they're here and again here they're expecting strong dollar. How is it that you're gonna sell? Because these things they must correspond, right? When they say we're expecting strong dollar here, even here you must see strong dollar. You understand how am I saying they must correspond, right? I'm recording the session. I'm gonna share the session.
So,
Don't worry. If I'm too
so
fast,
if
it's
they
because of time.
so if they don't correspond, that means no trade, or after the news you observe and see what happens.
Yes. Yes. You don't trade, you watch, you let it sweep people out. After it have swept people out, you check for you now look for your break of structures. You understand what I'm saying? And you sell with your
Yes.
break of structures. Simple, nice, perfect. Reason why is because they're not corresponding. Look at this. AUD does not have strength. CAD does not have strength. 1, 2, 3, 4, 5. These bars are more than 5. Look at the green. Look at the green. You see this green arrow. It means it is doing what? It has strength. It is gaining strength. NZDJPY does not have strength. These bars are talking to us. So when you say 1 plus 1 on calculator, it must give you what? It must give you 2. When it does not give you 2, it means no, something is wrong. You just watch. You let it take people's money. After letting it take people's money, it's like this situation where you have unemployment and non-farm at the same time. Right? You watch, you let it take people out. After it have taken people out, because I saw many people it have taken them out. I'm sorry for that. Because I saw it have taken out many people. Why? Because people were expecting a big sale, right? Well, they're expecting a big sale, and we have unemployment rate. You see what I'm trying to say? So please, guys, please. It's nice that you monitor your currency strength meter before you trade the news. After monitoring currency strength meter, you make sure that you check how many events you have and you read the data. I told you how to read the data, and yeah. And this session will be shared in our group. Don't worry, guys. In fact, I will post it on YouTube. So yeah, I will post it on YouTube. Yeah, because we are many in this session. Let me see. We're not made, but no problem. Yeah. Any queue before it locks us out? We left with a few minutes. Okay, I take that as we all fine. And thank you very much for attending the session. We'll meet again tomorrow. Thank you for your time. I hope you all understood everything. Thank you very much. As long as we don't have questions, means we understood, right? Thank you for your time.
Yeah. Sure.
Sharp.
Voilà.